Hello student, today we are going to solve illustration 7 which is given in our textbook page number 120. This illustration similar to our previous lecture. In this illustration, one balance sheet and 6 adjustments are given, and you are asked to give journal entry and prepare revaluation account. Students, in previous lecture we have seen that how to make journal entry of adjustments. Same thing, today we are going to start one by one adjustment and give necessary journal entry. Before starting our lecture, just remind what is accounting effect of revaluation of assets and liability. In case of assets, there are two possibilities. If value of asset increase, then asset account debit to revaluation account, and if the asset value decrease, then inverse entry revaluation account debit to assets account. Same thing in case of liability. If liability increase, it is a loss, so revaluation account debit to respective liability account, and if the value of liability decrease, it is benefit, so liability account debit to revaluation account. Right? Let us start one by one adjustment. Our first adjustment is the value of land is rupees 7 lakh. The book value of land is rupees 5 lakh and new value of land is 7 lakh. So here the value of asset increase and increase in value of land. So what is journal entry? Land account debit to revaluation account, right? So this is your first entry, land account debit to revaluation account. How much increase in land? Difference. Old value 5 lakh and new value 7 lakh. So 2 lakh rupees increase in land. So 2 lakh land account debit to revaluation account 2 lakh. Understand? This is our first entry. Now second adjustment. The value of building is increased by rupees 1 lakh. Here direct increase in building is given, and increase in asset means increase in building. So journal entry very simple, similar entry, building account debit to revaluation account. So your second journal entry, building account debit to revaluation account. Here direct increase in building is given 1 lakh. So building account debit 1 lakh to revaluation account 1 lakh. Right? This is your second entry. Third adjustment, the market value of machine is rupees 2,50,000, which is to be recorded in the books. In the balance sheet on asset side, value of machinery is rupees 4 lakh and new value of machinery is rupees 2,50,000. So how much reduce? Difference 1,50,000. And if there is a decrease in machinery, then it is a loss. So revaluation account debit to machine account. Your third journal entry, revaluation account debit to machine account or machinery account. How much rupees decrease? Difference 4 lakh minus 250 is equal to 1,50,000 decrease in machinery. Right? Fourth adjustment. Your fourth adjustment is provision for doubtful debt at 20% on debtors. Book value of debtor is 1 lakh. Debtor book value 1 lakh, on which 20% bad debt reserve. 20%. So 20,000. Here provision for bad debt reserve is the reduction in value of debtors. and if the debtor reduce, so it is a loss for business. So revaluation account debit to bad debt reserve. Revaluation account debit to bad debt reserve. How much rupees? 20,000 rupees. The 20,000 rupees reduction in debtor means provision. So revaluation account debit to bad debt reserve account. Fifth adjustment, creditor amount into rupees 10,000 are not to be paid. Not to be paid means in future creditors are not to be paid, means reduce. And if the creditor reduce, creditor is a liability, so creditor account debit to revaluation account. Creditor account debit to revaluation account. Okay, how much rupees reduce? 10,000 not to be paid means 10,000 reduce. Understand? 6 number. Your sixth and last adjustment is income receivable amounting to rupees 5,000 and outstanding expense amounted to 3,000 which are to be recorded. To be recorded means not recorded, unrecorded. Two particulars are unrecorded: income receivable and outstanding expense. Income receivable is an asset, while outstanding expense is a liability. So here two separate journal entries are required. First, income receivable. It is an asset, and if asset created, asset increase, so asset account debited to revaluation account. Which asset increase? Income receivable. So 6.1 entry, income receivable account debit. Income receivable account debit to revaluation account. How much amount? 5,000. Right? And in the same number 6.2, outstanding expense 3,000 to be recorded. It is a liability of the business, and if liability increase, it is a loss. So revaluation account debit to outstanding expense. Revaluation account debit 3,000 to outstanding expense 3,000. Right? This is your sixth and last adjustment. Students, here 7 entries for profit and loss of revaluation account. Right? So we have kept 4 or 5 lines for last journal entry of profit and loss of revaluation account. Profit and loss of revaluation account can be found out by preparing revaluation account. And in previous lecture, we have seen that how to prepare revaluation account by making posting. Let us start posting of journal entry. The first journal entry is land account debit to revaluation account. So according to rule of posting, revaluation account is credited. So we have made posting on credit side of revaluation account by land account. How much? 2 lakh. Second entry, again revaluation account credited. So credit side of revaluation account right by building. How much amount? 1 lakh. Third entry, revaluation account debited. So debit side of revaluation account we have to return to machinery account. How much? 1,50,000. Fourth entry, revaluation account debit to BDR. So debit side of revaluation account we have to write to bad debt reserve. How much amount? 20,000. Fifth transaction, creditor to revaluation. So it is revaluation account is credited. So credit side by creditors account. Amount as per journal entry 10,000. Sixth entry 6.1, 6.2. In 6.1, revaluation account credited. So credit side we have to write outstanding income account. Or you can also write income receivable account. Okay, income receivable account. Amount 5,000. 6.2, revaluation account debit to outstanding expense. Here revaluation account is debited, debit side to outstanding expense account. Rupees 3,000. this is posting of 6 entries, right? And last we have closed revaluation account. So here total of credit side of revaluation account is higher. Total of credit side of revaluation account is higher. Total of credit side of revaluation account is 3,15,000, right? 3,15,000. And difference is called revaluation profit, because credit side had, so difference is called revaluation profit, and revaluation profit transferred to partner capital account in their old profit sharing ratio. 3 partners are given: Bhavna, Bharat, Bhunesh. Right? Difference 1,42,000, and profit sharing ratio of old ratio of partner 2:1:1. So 71,000, 35,500, 35,500. This is distribution of revaluation profit in their old profit sharing ratio. And from this calculation, from this distribution, we are required to make last entry of profit of revaluation account. So what is journal entry of profit? Revaluation account debited. Revaluation account debit 1,42,000 to one by one partner. There are 3 partners, so one by one. To Bhavna's capital account 71,000, to Bharat capital account 35,500, and to Bhunesh capital account. Bhunesh capital account 35,500. Right? And at last make total. Total of journal is 6,30,000. So this is the example of revaluation of assets and liability. Right? Okay. Thank you very much.